Well, hey everybody, welcome back. It's great to be back with you. I've been away for the last few days, but it was well worth it to say the least. And that is definitely saying the least. It was well worth it. I'm super excited about the things to come for Wealth Charts family members there. All you Wealth Charters got some great things happening. So I was away for some big meetings to do some great things with you guys and for you guys. So super excited. Now, that being said, let's go ahead and pick up on some of the recent videos that I'd shot for you. You recall back, kind of recapping to some of those videos, we talked about the 3 accumulation bars down below, right? So then I said, well, okay, so if we get back up here into this channel, I'm going to be looking for longs up to this area, right? So then, and I said, then once we start moving from this area up to this area, I'd be looking for longs again. Well, so of course, you know what I did back when we were having, that movement up. And then right over here, now I was focusing on long side trading today. Now, I went ahead and I said, I want to get to the office right away. I'm so excited with all the wonderful things to come for Wealth Charters, and I'm excited about, trading these markets. So I went ahead and came right back, and what happened was I followed through with that whole same concept that I wanted to be focusing on longs right up there to the resistance. Now, so let's talk about the trading in a few moments, because, I always talk to you about trading involves risk, not just reward, so you can lose money just as easily, as readily as you make money, especially if you don't follow your rules. So we're going to talk about that in a moment. Now, what ended up, a couple of things I want to just, before we get to that, I want to remind everybody where we're at now. So as you can see, we've got multiple layers of resistance right here in this area that we're at right now, okay, on the SPY. So I'm watching this 405, 407 area here. Okay, I'm watching that area because you see 2 key resistance levels right in that area, and that stalled us out today. As you can see, we pulled back off the highs with a distribution bar, actually. So with that being said, I'm going to be watching that area into next week. Just like I said, I'll be looking for the longs, going from here to here and here to here. Well, now I want to see if we can pierce through this area. And I don't just mean trade up for a few dollars, few cents, and then roll right back over. But I want to see it get up here, hold, and start to fire off more buy signals, because then there's some good opportunity back up to these double lines. You recall these lines were very important, have been very important, for quite some time. They were the key support areas that then broke down through, that then were resistance. So you can see just how important that 420 to 423 area is up above. But that can lead to some nice opportunities between here and there, right? So, and then you'll see over here on the dailies got resistance, but I really think it clears it up for you if you take a look at this weekly chart. The key area I'm kind of focusing on. But when we stretch up into resistance and we have kind of this M pattern here, I'm going to see if we get a little pressure maybe, early on, and then, start to, build back up. But I'm going to be, I definitely prefer to go long into next week if possible, if we can stay above that 405, 407 area on the SPY. Okay. Now, with that being said, though, let's talk about, so that's great. So that's my general initial theme that I'm focusing on there. And I appreciate Ziad covering for me earlier in the week, since I was doing the traveling. Now, let's talk about what I did wrong today, okay? Or I could have done better at a minimum, I guess is certainly the way to say it. Because, I taught you during the summit how what I really love to do is find these pullbacks into the champion cross and then look for the resumption. I like to go ahead and pull down and then pull back up and go back to green. I like to go back to green, right? And then I like to pull back in and go back up, right? Well, so the thing is, what happened was I got to the office here, went in, was setting up everything, getting back into it. Of course, sharing a lot of excitement with the team, great things coming, and then I got to sit down. Well, what I did was I saw, oh look, the 1 minute chart here had a fresh buy zone, and then we were, kind of pulling down, we were pulling down into, supports and, kind of popping back up on the speed lines. We'd cross back over on the thing. So this is kind of what I was seeing, right? So we were pulling into the champion cross, pulling back out, pulling in, pulling out. So this is what I was looking at that time. So I pulled it right back to where I was. Now, if you look at one thing here, the daily chart going green and giving me great signals. The hourly chart was great, right? So far everything was looking pretty darn good. All right, the 1 minute chart was looking really good. So I went ahead and I said, you know what? And we were going back to green on the 5 minute chart. Okay, so I had everything going my way, except for one small detail. We were still on that 5 minute chart, so another higher time frame here, sitting here in a sell zone. And if we're really trying to do that, so we talk about calculated trading and confident trading. Okay, I am a confident trader, so I took that trade. However, the reality is my percentage of opportunity there went down as far as risk. My risk went up and my potential opportunity went down in a situation like this. And this is the kind of area where, from my perspective, traders run the risk of potentially losing money, not making as much money, things like that, because trading involves risk, like we always talk about. And this is one of those examples of, boy, it sure would have been nice to have the probabilities a little bit more in my favor. So I took the trade. I took it much more as a confident trader, but it was unnecessary to do so. Yes, I went ahead and I made money in it, but I had a lower probability of opportunity from my perspective, rather than waiting for the 5 minute not just to be green here, but to go ahead and actually be above the champion trend sell zone. Then I would have had 1 minute buy zone. I would have gone ahead and had hourly buy zone. I would have had daily buy zone, right? So I would have had all those buy zones and the 5 minute, talk about firing on all cylinders, right? So yes, I had a lot there, especially with the higher time frames, daily, and hourly in my favor. And then the 1 minute was right back in there. So that right there is, an above average trade compared to sometimes like right over here where you're looking for long side trades. I'm looking for the 1 minute, 5 minute to be in alignment. See the champion trend and the champion cross going ahead and being, buy side on the 1 minute. And I just want to kind of be above the speed lines or above the champion cross, so I'm not as concerned about the champion trend on the daily as I am on one of the key time frames I'm trading off of when I'm doing intraday type trades. Now, if I was doing a swing trade, then I really would like to see that buy zone and that champion cross go ahead and be both green like it was here today. So buying that when that's in a downswing, that would dramatically lower the overall probability from my perspective compared to being more in the buy side. So the point that I'm making with all this is it's something, especially if I were just a calculated trader. Remember, I told you, I do like to take calculated trades myself where we get everything right and kind of everything stacked because it's just a good feeling, more confidence, in taking the trade and everything else. So in order to really be calculated, I really shouldn't have been going against the sell zone. Confident trader where I had the 1 minute, the hourly, the daily with me, great. So, but I lowered my probability slightly by going ahead and not waiting for it to happen with the 5 minute chart as well. Okay. So in the end, I did go ahead and make money on the trade, okay, and then this market went ahead and continued to go up there. Look, so then it was starting to do everything it's supposed to do, right? So after that trade, it went in and pulled back, took off, right? It pulled back, took off. So now we're back to exactly what we want to see. Now I've got them all in that direction. Does that make sense? So if I would have just waited a little bit longer there, right? I didn't have to be so anxious. Obviously trading's my passion. I was, sitting in meetings the last couple of days and discussions that I kept going back to my charts, just looking at the market there, looking at opportunities while I'm sitting there with these big, huge business deals. It was kind of funny. And, because my passion is the market. It has been for 2/3 of my life. It's been my passion and I've been trading it for roughly half my life. And so, so obviously I just love to be in the markets. But you could see how if I would have just waited just a little bit longer, then all stars would have been in alignment. Now, I did end up going and doing several trades, so I did go on to do better, from the perspective of statistically what I want to see, right? So, again, we saw that area over here, then we talked about coming back. You see it pull back, so it took back off. See it pulled back in, went back to green. Okay, so now I got the 1 minute, got the 5 minute, got the hourly, got the daily. Great. So, of course, I went back to doing something that is higher probability from my perspective. Again, trading can always involve risk and loss. Nothing's 100% of the time, but there's those statistical probabilities that in my mind I'm trying to go after. And so that's why I wanted to share with you today. It's not that I lost money, but it's that I could have done better. And I think if people learn, what can cause losses more so and more readily, what is higher quality trading, I feel like that's a better environment for you guys to learn from. So I wanted to share with you what I could have done better. If I would have just waited a little bit longer, waited for it to go back to green, then I would have had things, right from the get-go much more in my favor rather than, okay, the first one, knocked it down a little bit with the 5 minute, going ahead and still being a champion trend sell while everything else was, good to go. But then just waiting a little bit longer could have had everything much more in my favor the way I like it. Okay, so I hope that helps. Hope that gets you guys thinking about things, how critical it is to line up the things. And of course, if this was a swing trade, if I'm looking at this from a day or two, then I might look at a 2 or 4 hour chart along with the daily. If it's a week, 2, 3, 4 weeks plus, then I might look at it from a weekly and a daily and a weekly. I like to get as many of those things lined up as possible for those different things. So it applies whether we're talking about, it's fractal, so it applies whether we're talking intraday or swing trading. And then of course from a longer term position perspective, and that we're looking at, you can add monthly charts into that mix as well. Okay, so I hope that helps. Kind of sharing with you a little bit about what I could have done better there and why, sometimes losses, even though I didn't take a loss, losses could have happened there more readily than if I would have waited for things to go ahead and come. So, it was a great day in the end, but that one trade I could have done better, and I wanted to share that. So I hope you guys have a phenomenal weekend. Maybe I'll get you to even replay this video a couple times to go ahead and re-listen to this and understand what I'm saying to help you be better and better and better every single day. Have a great rest of your weekend, and thanks for being the world's greatest student family. I can't wait to go ahead and see you guys next week. Take care, everyone. Bye-bye.